Greg says, Coach, I'm looking at a bull flag on Euro Aussie, 15-minute chart, 15:30. Perhaps we can look at that. Sure. Euro Aussie. Do we need to look at those specific time frames, or is it okay if I just do hourly instead of 30-minute? I don't mind either way. I just want to know. Euro Aussie. That was actually my radar as well. Potential advanced pattern is what I had in my notes. And we're at 37 minutes. Okay. Hourly is fine, but shows more natural. Okay. Let me ask you this: what is your natural progression for charts, Greg? For time frames? Or do you have a natural progression? Maybe that's the better question. And that's a question for everyone as well. Weekly to 5 minute, but what time frames do you look at? Do you look at every single time frame from weekly to 5 minute, 5 minute, 6 minute, 7 minute, 8 minute, 9 minute, 10 minute, 11 minute, 12, 13, 14, 15, 16, 17, 18? What is your process? Any American football fans out there talk good conversation this morning on the Miami Dolphins and their process of selling all their best players, aka the tanking process. I don't look at them as a process. Well, you need one. If you don't have a process, how do you have consistency? If you don't have a process, how do you have consistency in your trading? And we all know the formula, right? What's the formula to trading? Consistent analysis plus consistent execution equals consistent results. If you don't have a process, how do you have consistent analysis? We say, when I see something on a time frame, I confirm, check higher. How do you know what time frame to go to? So imagine me being I'm reading your trading plan, I'm in your shoes. How do I know where to start? Do I start on the 8-minute chart? $22-minute chart? 25? Weekly? I don't have a process yet. I would encourage getting one. Because again, if you don't have a process, it's basically you're fishing with no rhyme and no reason, right? You are everywhere, and if you're everywhere, you're nowhere. It's basically the same as not having rules. Because again, if you don't have a process of analysis, how are you doing consistent analysis? This is an open question for anyone. If I don't have a process in which to do analysis, how am I doing consistent analysis, right? Imagine you're McDonald's, right? McDonald's, think of any fast food chain restaurant, right? There is a process on how they make their burgers, right? An assembly line process. Right? Bun comes out, meat goes on, mustard goes on, cheese goes on, right? A process. And because there's a process in what they do, although perhaps not delicious, they're able to produce a consistent product, right? There's consistency in what they're producing because they follow a process. They're employees. They can easily train employees because it's just following the process. We need to have that same process in our trading, or else we're going to be very inconsistent. Right? So I ask you this, right? So what is your do you look at your higher time frame first? I know you mentioned you look at a time frame and then you go to a higher time frame for confirmation, right? We talk all the time in here about what? IPDE, right? Identify, predict, decide, execute, right? When we identify and predict, what is the point of that? What is the point of going to that daily like we just did with Pound New Zealand and just identifying? and predicting. What are we doing in that process? Who knows? We're setting and creating a bias. We are telling ourselves that, okay, based off what I see here, I know I want to be on this side of the market. I know I want to be on that side of the market. I know I need to wait until this level is hit for blah, 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 blah. I know I need to wait till that level is hit for blah, 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 right? We are developing we're creating that confirmation bias. And we have an understanding of exactly what we're looking for. Then we go down to the lower time frames, and then we look for technical reasons, rule-based technical reasons, obviously, for how we can get involved based off that bias. But we created the bias first, right? We created the bias, and now we're looking to complement it, right? You can even, from a bigger example, it's the same thing in investing. Investing is a little bit different. The technicals aren't as important to me in investing, but you're creating a bias on a business or a specific stock on why you value it, right? Most of the time you're buying. Then if you were to implement technical analysis, you're looking at the technicals only to complement your bias, right? You're not saying, I want to be long beyond meat based on my fundamental bias. Not saying you do, but just as an example. But now I want to get short based on my technicals, right? There's a conflict in interest there. So I would encourage you to develop a process, Greg. I've noticed over the weeks that there's a lot of confusion and inconsistencies in what you're doing as a trader. And that's not a negative. That's just kind of the natural thing of going through the grind of learning how to trade. But I think if you set yourself a process, I think it's going to make things a lot easier. You're going to be a lot more consistent. So I would do this. I would choose, are you swing trader, day trader, or both? Yeah, because you're moving back and forth between the weekly and the 5. There's everything in between there. There's everything between the weekly and the 5. Sheesh. Honestly, the weekly has it will have no effect on the 5. There's no point in looking at the weekly as far as trying to figure out what to do in the 5-minute chart. There's just zero effect. Nothing. So if you're a day trader, I would do this. I would choose perhaps 3 time frames, 2 or 3 time frames. 2 minimum, 3 maximum, right? I would choose a higher time frame. That is the time frame in which you look to gain perspective, your bird's eye view, right? You're in a Tesla rocket car in space, and you're getting the bird's eye view of what's going on. That bird's eye view is used to create what? We just mentioned it, but I want to hear you guys say it again. Say it again. Your bias. If you're using a 2 time frame setup, and this is going to depend on your entry techniques, I would then choose a lower time frame, and that lower time frame is used to involve yourself in the trade. So just an example, again, there's absolute freedom in what you choose, but if you're going to use the hourly as your higher time frame, maybe you use the 5-minute as your trading time frame. So you form your bias on the hourly, you execute your trades on the 5. Every other time frame in between that is irrelevant. Now again, you have the freedom to choose whatever time frame you use. You can do hourly 15, you can do a 3 time frame setup, hourly 15.5, hourly 5 range bar. It doesn't matter. Like 4 hour, hourly, it doesn't matter, right? But you want to have a consistent process in which you do. And then every single day when you look at the charts, you avoid all those other silly time frames, right? And you only look at the ones that are necessary for your trading, right? You guys have been with me in the live room a lot, right? You see what do I do every single day? Daily, 4 hour, 60. Daily, 4 hour, 60. Do I ever go 120? Do I ever go 2 hour? Do I ever do 30-minute? Right? No, I do the exact same time frames in the exact same order like a robot. That is my process. So try it out. Try it out. Again, it may take some thought to figure out what time frames you want to use. Like stuff like the 15 and the hourly are going to be very similar. So, those 2 back to back, maybe not as important. But figure it out and stick to that process. I think you'll find that you're going to be a lot more consistent in your trading because now you're not everywhere. Because again, if we're just bouncing around the random time frames, we will always see what we want to see. It's just a matter of finding the right time frame to see it.